At this point, let's jump into some of the bigger picture charts, and let's start with the S&P. So here is the 30-minute chart of the S&P. On Friday, we got an upside balance breakout from the 2 to 3 days of balancing that took place between roughly 87 to 96. And at this point, heading into Sunday's Globex session and into Monday, as long as the market can hold above 93.5 to 96, that breakout can remain intact. Now, technically, we don't have any upside resistance because the S&P is making fresh all-time highs. But generally, when you get a balanced breakout, there is a tendency in the market to expand the range of the balance by 100%. So if we look at the 100% range extension of this multi-day balance, that means that the market could go up towards 25.05.5. So if this breakout is really going to sustain, then it wouldn't be very surprising to see the market go even higher in Sunday's Globex session and go up towards 05.5, and that's simply an upside range extension target. It's not necessarily resistance. So we just have to bear in mind that the S&P is making fresh all-time highs, so there's not going to be any hard resistance up here. The main question heading into Sunday is going to be whether buyers can hold ES above 93.5 to 96. If they can do that, then the breakout from Friday remains intact and the buyers remain in control. If we see a failure and a break below 93.5 to 96, then we could easily return back towards that 87 to 89 zone, which marks the bottom of this multi-day balance. And then if we're seeing a lot of broad market weakness and sustained downside momentum, then it would open the door for even a breakdown below that area. And below 87, buyers can still step in around the 78 to 80 area, and especially at 74 to 76. So that is the short-term view on the S&P. Let's move on to the Nasdaq. So NQ attempted a breakout above its recent highs on Friday, but that breakout attempt failed. So now heading into the upcoming week, we're going to be watching to see whether NQ can hold above the 59.92 high volume node, and we're going to want to see a break above the recent highs around 6,012, and then we have the all-time high at 60.27. So we're going to be watching to see whether Nasdaq is participating in the upside move. If it is, then it's going to make it easier for the S&P to head higher as well. If we start to see a failure in Nasdaq and NQ starts to come down, then it's going to weigh on the S&P and it can limit the upside in the S&P. So that's something to keep in mind in regards to NQ. See if it's holding 59.92. That would be a short-term bullish signal. And then on the upside, if we can take out 60.12 and then the high of day from Friday, which is around 6,015, then that would support continuation in the S&P as well. Below 59.92, we have support around the 59.48 to 59.60 area in Nasdaq, and buyers can still defend at that zone. And then below that, we can see that we have some support built up around this 59.16 or so. And then finally, the next area of support is going to be around the 58.97 to 5900. But short term, the main question is going to be whether Nasdaq is participating in the upside, and if it is, then ideally you want to see it holding above 59.92. Moving on to the Russell, this is a daily chart for the Russell, so we can see that short term it's attempting a balanced breakout, and it was also fairly bullish on Friday, but it broke into some resistance over here around the 1433 to 1435 area. So heading into Sunday's Globex session and Monday morning, we're going to be watching to see if TF can take out that resistance around the 1434 to 1435 area. If it can do that, then it opens the door to test its own all-time highs around the 1451, and TF taking out 1434 to 1435 would also support continuation in the S&P. So on the upside with Russell, keep an eye on 1434 to 1435, and then on the downside, we're going to be watching to see whether Russell can hold above this 1419 to roughly 1421, 1422 area. That would leave at least this recent multi-day balance breakout intact. So we have support around the 19 to 22 area, and we have resistance around 34.35, and in between the market can be balanced. But if we can take out the resistance on the upside, then it would serve as a bullish confirmation and support upside continuation in the S&P. So that is a quick look at the equities. Now, even though I don't trade crude oil or gold, I've had many people email in asking for just some thoughts on crude oil and gold. So we are going to take a quick look at crude oil as well. So over the last week, we've seen a pretty decent upside move in crude, but over the last couple of days, CL has also broken out into some short-term resistance around the 51 to 51.5 area over here, and we've seen some sellers step in. Heading into the upcoming week, if buyers can hold crude above 49.7 to 50, then the door would still be open for a potential breakout beyond 51 to 51.5. If you take out 51.5, the next area of resistance is going to be around 53, and then beyond that, you run into this larger time frame balance where there can be some decent resistance. We have this recent major swing high around 55.75. You can see that this area also served as a launching point for a downside directional move. So this 55 to 56, 57 is going to be a pretty decent area of resistance in crude if we even end up getting up there. But short term, the question is whether CL can take out this 51 to 51.5 area. If it can, then the next spot is going to be around the 53s. And then if you take out 53s, then you start running into some better resistance where sellers are very likely to step in. And then on the downside, if you can take out the 49.7 to 50 support, then this would mark a failed breakout attempt from this 5 or 6 day balance. And from there, we could go down towards the bottom of this day around 48.6. And from there, the next area is going to be the swing low over here around 47.5. And then we have some better support around the 46 handle over here. And bigger picture, you can see that crude is really just in a big trading range. So even if crude oil ends up failing and breaking down, it can still attract buyers at the major support levels below simply because bigger picture, it's just trading within this range. And if you zoom out even further, then crude is really in this much larger range that looks kind of like this. So short term, if we can take out 51 to 51.5, then it can gain some momentum to the upside into 53. If you take out 53, then the next major area of resistance is going to be around that 55.25 to 56.5, and that's a spot where you can expect a lot of friction and a lot of sellers to be active. So that is a quick look at the crude oil market. Now, last but not least, let's jump into gold. So on the larger time frame, gold is in a bullish phase right now. So what happened was we had this large balance area develop in gold, and we saw a breakout, and the breakout held, so buyers are in control. But following that breakout, gold ran into this prior larger time frame balance, and we saw rejection around the middle of this larger time frame balance. So right now, gold can continue to be range bound between this bigger picture balance breakout area and between the recent high. But if you are trading on a larger time frame, if you're position trading, then the buyers can maintain control above 1300 to 1307. So heading into the next several days and possibly even the next couple of weeks, the main question in gold is going to be whether this big breakout above 1300 to 1307 can hold. As long as buyers are holding gold above 1300, it can remain in a larger time frame bullish pattern, and we can see buyers step in on any kind of short-term pullbacks. And then on the upside, the resistance is going to be near this previous swing high, and if you take this recent swing high out, then it opens the door for eventually testing these recent highs around the 1390 to 1400 area. So that's the bigger picture view on gold. And again, I don't trade gold, I don't trade crude oil, but a market is a market, and the methodology that I use and teach in the S&P can very easily be applied to crude oil, gold, and pretty much any other market. And that's why we have students actually trading crude and gold and really markets all across the world. So that is the view on gold, and that wraps up today's recap. I hope you found it to be valuable. I hope you had a good week in the markets. Let's hope volatility picks up in the coming week now that options expiration and quad witching is out of the way, and let's see how the markets hold up based on our view of support and resistance. So those are our main thoughts. Again, I hope you all enjoyed your weekend, and good luck in the upcoming week.